We just had the Q1 earnings a couple days ago, and even though the stock did dip a little bit after that, there are a few key things that came out, especially in the earnings call, that I'm going to break down in the video today. Because within the first 60 seconds, the CEO opened his mouth and drops a number that's stopping all the doubters in their tracks: 125,000. Within 6 weeks of launching Wegovy on the platform, HIMS fulfilled more than 125,000 shipments. That in itself is not a struggling company. That's a company that just nailed the most important pivot in its history, moving forward as a distribution disruptor in this space. So today we're going to be doing a deep dive on exactly what was said on the earnings call. I've listened to the whole thing and I'm going to break it down and translate it for you. Now, Dudum said 12 things on that call that rewrite HIMS' bold thesis. By the end of this video, you'll understand all 4 strategic pillars he's laid out. The first one is the Wegovy win, what 125,000 shipments actually means in dollars and what it can mean to the stock price going forward. The global scale, he said world's largest consumer health platform. The third part is the moat and why competitors just won't be able to catch up. And the fourth one being the patience around peptides. Why not being first is a smart play. Let's get stuck into today's video.
Welcome to the game, it's the Instant Stocks by Mikhail.
And if this is the first time on my channel, welcome. My name is Mikhail and I cover stocks that can 5, 10x and possibly even more in the coming years. And over the last 4.5 years, we have developed a software that allows our team of professional day traders to trade through your Interactive Brokers account completely hands-off. And the great thing is the cash stays in your account the whole time, which means you can be liquid at the end of every single day because 95% of the trades we take are same day trades. We shoot for anywhere from 5 to 15% returns every single month. And over the last 7-month run, we had a 25% return from September until March. And one of the reasons we built this because we understand traders are busy. You probably have a business, a family. That is a cat on my screen. You probably has a business or family, or you may have tried signal trading groups before. And the problem is you're busy. You're not at the screen. You can't catch the trades. You FOMO buy, you chase losses, or you just completely miss the trade and try to enter at a different point. We take care of the entire process for you. So all you need to do, switch the software on before the market opens and then do that every single day and you are good to go. Here's some results from some of our clients recently, and here's some results from a client who actually bought a house off the back end of our team's advice on stocks on YouTube. Now, if you're looking to triple your portfolio in the next few months, we are not the people for you. Have we added 30% to people's portfolio in 1 month? Yes, we have. Have we had 5% drawdowns? Yes, we have as well. That is the reality of being in this space. And if you're looking to leverage the market when it's going down and when it's going up, and you want to have exposure in different stocks all year round, we are the place. We have a 100% money back guarantee as well. So click the link below or go to x10daytrade.com, book a call with myself. I'll walk you through the entire process and show you what we're doing right now. And we're about to launch version 3 of our AutoPilot software. When we do that, spots will be limited, price will be going up, and the results will be going up as well. Without further ado, without cats on the screen, let's get stuck into today's video. So a quick pre-frame and some context before we dive in. Everything I'm about to cover comes directly from the Q1 2026 earnings call, which happened just a few days ago. Now, these quotes are verbatim, not paraphrased, not edited for effect. The actual words of Andrew Dudum, the CEO himself, used just a couple days ago. Now, the surface numbers were rough. Q1 revenue, 608 million, a 9 million miss versus consensus. We had a miss on EPS as well, and the stock dropped 14% the next day. Now, some of you guys who watch my content, I do have some shorts on here as well. So you guys were probably celebrating depending on your exposure, your timeline, what you were doing. But here's the thing. While the financial media spent 2 days obsessing over the headline miss, the earnings call told a completely different story. A story about 125,000 Wegovy shipments, about 969% international revenue growth, about a CEO using the most confident language of his entire public company career. I've organized the 12 quotes into 4 strategic pillars because that's how the story makes sense. So let's start with the one that matters the most. Now, the first part is this. By the way, Garfield's going to be joining us on this call today. Garfield was a rescue cat. If anyone's looking to adopt a cat, we have a cat for adoption. That's it. indirect pitch. So his exact quote was, within 6 weeks of introducing direct access to Novo Nordisk GLP-1 products to our platform, we have fulfilled more than 125,000 shipments for Wegovy products. 125,000 shipments, 6 weeks. Let me put that into perspective. The Novo Nordisk partnership went live on the HIMS platform on March 26. That's 5 days before Q1 ended. So the vast majority of those 125,000 shipments happened after Q1 closed. This number is barely visible in the Q1 results, but it will be fully visible in Q2. So let me do the revenue math for you. The Wegovy pill on HIMS platform, approximately $199 per month. The Wegovy pen is approximately $299 per month. The blended average comes somewhere between $200 and $300 per shipment. 125,000 shipments times 200 is 25 million. 125,000 shipments times 300 is 37.5 million. In 6 weeks, from a revenue line that did not exist at the start of the year. Now, if we look at an annual number projection on that, 125,000 shipments in 6 weeks projected to roughly 1.08 million shipments per year at that rate, if they continue at that rate. Now, at a $200 to $300 blended price, that's anywhere from 215 to 325 million in annualized Wegovy revenue. That's potentially 10 to 15% added to HIMS' total revenue from one partnership. And that's accelerating. The CFO, Yemi Okumpe, added a second data point on that call. HIMS is now adding more than 100,000 new weight loss subscribers every single month. Now, we mentioned this a few weeks ago when the CEO posted on X that they were projecting 100,000 subscriber run rate every single month going forward. 100,000 per month. That's 1.2 million new weight loss subscribers per year. HIMS's total subscriber base at the end of Q1 was 2.58 million. The weight loss specialty is adding subscribers at a pace that could nearly double the total base in a year. Let that land. Now, here's the quote that puts it all into context. Dudum said adoption is at a near record levels. His quote was, even beyond the demand we saw following this year's New Year's and Super Bowl campaign. That line really matters. New Year and Super Bowl at HIMS are two biggest demand spikes of the year. The New Year's resolution crowds and just a pure exposure on Super Bowl, $40-something million spent in Super Bowl advertising. Now, the CEO is saying Wegovy demand is exceeding both of those in a non-peak period. Q3 and Q4 with normal seasonality plus Wegovy running at full steam, that combination could be explosive. The customer engagement data confirms the quality of demand too. About 90% of new weight loss subscribers downloaded the HIMS app. The average new subscriber interacted with a provider 3 times in their first month. 90% app download rate is dramatically higher than most consumer subscription services. 3 provider interactions in month 1 means subscribers are engaged, which also increases LTV and stickiness for clients coming on board. Not just signed up and forgotten. Engaged subscribers retain longer. Engaged subscribers cross-sell into other categories. That is the flywheel I've spoke about so much before. They come in, they have a really good experience, they cross-sell, they upgrade, they add on to what they do, and then the flywheel continues because all of a sudden, HIMS has a higher LTV, they have a higher average revenue per user, which means they have more revenue, more gross profit to reinvest, to grow and scale. Now, if we connect this to the numbers that actually matter for investors, Q2 guidance, 680 to 700 million. Analyst consensus before the report was 642 million. HIMS guided 7.3% above consensus for Q2. The implied year-over-year growth for Q2, 15.4% versus Q1's 4%. That's an 11 percentage point reacceleration from one quarter to the next. Now, the Wegovy momentum is the primary driver of that reacceleration, and full year guidance was raised 100 million to 2.8 to 3 billion. You don't raise guidance after a miss unless you see real signals in the data. The signals are exactly that, 125,000 shipments and 100,000 new subscribers per month. Now, one of the other important quotes are, he was quoted saying, "We are rapidly becoming the world's largest consumer health platform." That is the single most ambitious sentence in the entire transcript. The world's largest, not the largest telehealth company, not the largest US digital health brand, but the largest global consumer health platform. That puts HIMS in direct competition with CVS, Walgreens, Amazon Pharmacy, names that do hundreds of billions of dollars in revenue. So for Dudum to use this language, he's signaling that he sees HIMS competing at that scale. Ah, the cat is biting me. Okay. Go down, buddy. Now, we've lost Garfield for a little bit. He was biting me in excitement. So for Dudum to use this language signals, he sees HIMS competing at that scale, not at a niche player, as the dominant global platform. Now, Why does he believe this? Why is he making such a bold statement like this? Now, there's three reasons I personally believe for this. The first is the international business is already exploding. The rest of the world revenue in Q1 2026, 78.2 million. In Q1 2025, 7.3 million, 969%. International went from 1.2% of total revenue to 12.9% in 12 months. That's 7 countries they currently are active in today. US, UK, Germany, France, Ireland, Spain, Canada. 500 million addressable adults. Eucalyptus closes mid-2026 and adds Australia and Japan. Not yet in the guidance numbers. Remember, Eucalyptus, they raised guidance 100 million, but Eucalyptus hasn't even been included in that. The second part of this is the force multiplier effect. One of the other quotes was, "We believe our global scale will act as a force multiplier." Force multiplier is military language, and simply translated down, it just means a smaller force can defeat a larger one through strategic leverage. So when HIMS negotiates with Novo, the conversation isn't just about US volume. It's about US plus UK plus Germany plus France plus Ireland plus Spain plus Canada. Every supply negotiation is amplified by the multi-country footprint. A single country telehealth competitor negotiating the same deal gets worse terms. That gap just widens every time HIMS adds a new country. The third part of this is the care advantage and the depth of it. So the quote was, "The breadth of care we can provide is becoming a real strategic advantage. HIMS now serves sexual health, hair loss, mental health, dermatology, weight loss, testosterone, menopause, diagnostics, and we're also going to look potentially peptides in the future, but we can't speak to that yet because it's not 100% confirmed. All on a single platform. Shared customer data, like millions of data points on every single client customer, their behavior, how they interact with the platform, their results, their side effects, when a client would usually churn depending on the millions of clients they've had before. Shared AI personalization, so they can cross-reference and cross-check data to see what's actually happening. This is a big thing that a big part of Big Pharma just don't have the ability to collect data at this scale. And the other part of this, management disclosed that 43% of new product subscriptions in Q1 came from existing subscribers. The cross-sell flywheel is working. A subscriber who joined for hair loss is now buying weight loss. A weight loss subscriber is a natural candidate for testosterone or peptides later on. The more categories HIMS adds, the more cross-sell surface area exists. That's a compounding economics engine. He was also quoted saying, "Platforms like ours are the place pharma, biotech, and diagnostic companies are increasingly relying on to reach more people with innovative treatments and services." This is the most important line for understanding the long-term business model. HIMS isn't just a distribution channel. It's the channel pharma needs to reach modern consumers. Think about Novo's alternatives. Traditional pharmacy, fragmented, expensive, zero engagement layer. Building their own direct-to-consumer platform, costly, slow, no existing subscriber base. I've made videos on this before on how HIMS are snowballing this segment specifically because they're collecting so much data at scale and they're widening the gap the more data they collect on the largest subscriber pool. So when someone comes to start, the amount of data, it takes a very long time to go from a small amount of subscriber base to 2.5 million and then compound that data over a longer time horizon. Now, partnering with HIMS, instant access to 2.58 million engaged subscribers, clinical care, app management, AI personalization. The unit economics for Novo are dramatically better through HIMS. 125,000 Wegovy shipments in just 6 weeks has proved that. Every other pharma company with a consumer-facing product is watching. Eli Lilly has already followed with Zepbound, and more will come. See, he also said 9 years of data, a verticalized domestic supply chain, an agile and intelligent platform, a leading global footprint, and growing network of trusted health innovators gives us distinct advantages. Doubling down on what I just said before. Dudum just listed HIMS' entire competitive moat in one breath. So if we unpack all of that, 9 years of data, HIMS was founded in November 2017. By Q1 2026, 9 years of subscriber data, hundreds of millions of clinical interactions, prescription decisions, treatment outcomes, adverse side effects, retention patterns, cross-sell behavior, customer behavior and psychology. This data set, you just can't buy it. It cannot be accelerated. A competitor starting today needs 9 years to catch up. By then, HIMS has 18 years. The data flywheel just never stops compounding. The other part of this is HIMS owns its pharmacy operations, owns the California 503A and 503B compounding and peptide manufacturing facility. It owns the diagnostic integration through your bio. Most telehealth competitors are asset light, relying on third-party pharmacies or third-party labs. Asset light is just capital efficiency, but it means you don't control quality, speed, or unit economics. HIMS controls all three of these. That's why they can compete on price and quality at the same time. Also, if we look at the technology and the AI side of things, the CTA, Mo Elshenway, came from Uber. Now, with a 40-person AI engineering team, AI Companion for Weight Loss launched in 2026. 90% of new subscribers downloading the app in month one. The platform isn't just functional, it's improving every single quarter on customer retention, delivery, and quality. And it's just making HIMS moat even stronger because it's harder and harder to replicate. Like, each new market entry adds to the global footprint. Each new partnership strengthens the network. Each new specialty enhances cross-sell. Each new year adds to the data accumulation. That moat deepens every single time. It doesn't erode. Compare this to traditional telehealth. Look at Teladoc, has been struggling for years. MD Live was absorbed into Cigna. Doctor On Demand and Amwell have failed to scale. The video consultation model is commoditized. HIMS' integrated approach with clinical care, pharmacy, diagnostics, and AI personalization is just structurally different. And the more HIMS scales, the more obvious the difference becomes. One of the more interesting ones, and honestly, I thought this would be the other way around. I would have seen or thought HIMS would have wanted to be absolutely first to market in peptides. I've been saying that in quite a few videos, but what we saw on the earnings call was Dudum said exactly this. We won't launch access to peptides until we meet these very high standards that we believe everyone should be meeting. Now, there were some things I took away from some of this call, and one of the things I took away was I don't feel like they want to be absolutely first to market. And this is the most strategically important quote about the HIMS approach to peptides. I'll give you context. The peptide market has been heating up for 2 years. Joe Rogan talks about BPC 157. Andrew Huberman covers peptide stacks. Like, whether you follow those two or not, they have massive, massive audiences, and they have audiences specifically in the optimization and the fitness space. Now, Joe Rogan, not exactly optimization, but Andrew Huberman, 100%. Now, gray market vendors sell TB500, MOTC, all different types of peptides directly to consumers, and usually it's labeled for not human use and just for research purpose only. And I saw an article the other day that up to 30 to 40% of peptides that people are buying from these gray market are either under or overdosed. And that can really matter if you're not aware of how much you're using. So the cultural moment around this is real. The demand is real, and HIMS is being deliberately patient in this. Well, why is a good question? Because gray market peptide vendors operate without clinical oversight, without consistent sourcing, without regulatory compliance. If HIMS launches before the regulatory framework is 100% clear, they risk being lumped in with those operators by the FDA, and that would be a very bad thing for the stock price. The patient approach is the correct approach. Now, if we look at the regulatory timeline, they had the FDA Compounding Advisory Committee meeting July 23, 24, and they're going to cover 7 key peptides: BPC 157, KPV, TB500, MOTC, emideltide, Semax, and epithiolone. Day 1 covers 4 peptides, and day 2 will cover 3. The committee vote is not binding, but it does signal the FDA's direction. After the meeting, the FDA issues formal guidance. HIMS launches selected peptides under a verified regulatory framework. Late 22, I've been saying mid 2026, but HIMS's language around this, I'm now actually pushing my speculation to more later in 2026 and early 2027. Now, the second meeting they're going to have to cover 5 more peptides happens in February 2027. Now, the peptide opportunity unfolds over 12 to 18 months. The patient capital will win in this. And the quote that made me really look at this through a new lens was this: we likely will not be the first to market, but when we do, we'll make sure that we feel like we've got everything done the right way. Not to first market was a very key thing I listened to in that. It's a strategic choice, but it's not a constraint. Think about the GLP-1 playbook. Look what happened with the Novo situation. And Novo Nordisk launched Wegovy in 2021. By 2024, demand exploded. By 2025, supply constraints resolved. HIMS entered branded GLP-1 distribution in March 2026, 5 years after launch. Was HIMS late? Yes. Is it going to matter long term? 125,000 shipments in 6 weeks? That's what entering a mature market with established consumer awareness starts to look like. And the peptide playbook is identical. The gray market operators educate the consumer. HIMS enters with verified sourcing, clinical oversight, and FDA compliant manufacturing. Have you ever been walking on a hike, a trail, or maybe on a beach and you can't really see in the water where you're going? I'm always like worried something's going to bite me in the feet. It's like letting your friend go to the sketchy waters and him walk through and just following his footsteps to make sure you don't step on anything bad or get bitten by anything, right? They're kind of using the gray market as that friend. You just, yeah, you go first, I'll follow you. And HIMS will then position itself as the safe alternative. That positioning commands premium pricing and premium retention. Now, there's a one key line that he said that I actually went back to the other transcripts and compared these to see what the language looked like. Andrew Dudum said, "I have never been more confident that we are building the future of health." Never been more confident. So let's compare that back to Q1 2025 call. The language was excited and optimistic. Q2 2025, pleased with our progress. Q3, bullish on the back half. Q4, increasingly confident in our path. Now the language has shifted to, "I've never been more confident." See, the progression is real there, and how much you buy into that will depend on you, but I thought it was just an interesting comparison to see what is the tonality, what is the language in happening over the years and over the quarters as we move through. Each call uses stronger language than the one before, and CEOs of public companies don't use this language lightly because every single word, everything they say gets binded to them. They face legal and reputational consequences if forward-looking statements are wrong. When a CEO posts on X, "We project 100,000 subscriptions every single month for Wegovy," you can guarantee that they mean that. Now, if a stock picker that you follow on X says something like this, you need to take it with a grain of salt. When a CEO says, "Never been more confident" after a quarter that looked like a miss, he's telling you he sees something in the forward data that the market hasn't priced in yet. The last piece I want to cover is the peptide patient side of things. Now, today, infrastructure is built. They own the California 503A and 503 peptide manufacturing facility since Q3 2024. Quality systems are in place. The next stage is going to be the FDA Pharmacy Compounding Advisory Committee reviewing all these peptides July 23-24. The back half of 2026 could look like quality validation stage. So they'll be looking at what is the regulatory frame that's been put in place, and they won't launch until they meet these very high standards because they want to be the safe option. They want to be the good guys, the trusted option, because if they were to go to market too early, we could have an absolute shit show with the branding and the interpretation of what HIMS is doing in the market. Then we go stage 4, stage 5. You'll be looking at commercial launch end of 2026, 2027, we could be looking at more peptides and all the numbers. Like, we're not going to get too deep into that because these are quite a few things need to go right. We need quite a few things to be in HIMS's favor for all of this to play out in the future. So let's land this plane because this is going to be a big one. We just walked through a bunch of the most important quotes from the Q1 earnings call. There's 4 strategic pillars in here: the Wegovy win, the global scale, the platform moat, and the peptide patient side of things. The honest summary: the backward-looking Q1 numbers were genuinely rough. Like, we can't argue that. Revenue missed consensus by 9 million, but we also expected it as well. They were quoted saying we were looking at a $65 million headwind with the GLP-1 saga and everything else happening in this quarter. I personally believe this is like a slingshot and they're loading up for Q2 because the projections, guidance, everything has been raised. When Eucalyptus gets acquired, once that goes through, I can see guidance being raised again. So if you're looking into the future, if you're looking to this as a more long-term hold, I still believe we have the ability to go over $50 by the end of the year. And if not, if we get a squeeze and all the things come together, I feel like we could be looking to touch on that $100 mark. As always, not financial advice. Do your own research, look at things objectively, question the things that you hear and see. If you want to keep up to date with my other channel, I'm covering HIMS every single day on both channels, and I'm covering another stock over on my 3rd channel there. So as always, appreciate you hanging around for the end, and I'll see you in the next video.